the world is bullish, and you heard people on TV more recently, everybody says super bullish in the long run. Medium term is uncertain, short term is very uncertain. I've never heard this kind of consensus come out loud and clear. So the consensus has to be threatened. The first question, more iconoclastic than anything else, is the long-term bull market really intact? I throw this to Vibhav to start the discussions. Is the long-term bull market really intact?
Long-term is something which is not all that relevant. Yes, I understand everybody wants to give the example of Warren Buffett and say, he made money over 20 years, 30 years. But all of us can't do that. First is, let's be very clear about it. And secondly, therefore, is it also in our context, is it relevant? So I would like to restrict myself to something, say, 3 years, 2 years, 3 years, 5 years at the most. Now, if you look at this bull market, which is started, again, when did it start? Everybody will believe that it started technically, if you look at it, when the market broke through that 2008 and 2011 top of 6350. But if I were to look at it as a technical analyst, and I don't generally do that, but if I were to really look at it that way and go back to the traditional Dow theory of technical analysis, there he says you date back. You don't know when a bull market has started. You have to go back and then see when it started. So if you look at that, the bottom was actually made of 4,500 on the Nifty. I'm sorry, I don't remember the Sensex levels right now. This was in 2011 or something. So after that second 6,300, then it went down, came up, and then it has never gone below that 45, and then it has made higher and higher bottoms. Right. So effectively, in that sense, the bull market has been on for more than 3 years already.
So if 3 years we've been in a bull market, let's say take the next 2-3 years, do you see much higher levels, or do you see?
A lot of the answer to this, I'm saying, is going to really come from when you think this global liquidity swamp that the central banks have put is going to come to an end. Now, just one point there. Of course, the marginal utility of more and more money probably goes on reducing. So as central banks keep on putting more and more money, the impact of that is going to reduce, and therefore you may not keep on going up, or markets may not keep on going at the same rate. But I think the real key lies in that. The day you see liquidity going down in the global markets, then things are going to be very different.
If I were to ask you, in the context of when I say the bull market, I think the consensus is what you're hearing today, and you're somebody who waits to hear this amongst investors and audience alike. So there are a number of things that have not happened in the world before. Whether it's in terms of easy money, whether in terms of a whole bunch of things which I know you're keen to talk about. In that context, can you correlate this and say that we may be empirically uncorrelated from the past?
Yeah, so Jake's on the point on the long-term bull market and the fact that the consensus seems so bullish. We always look for corroboratory indicators because it's very easy to say the consensus is bullish, and I don't actually find that many in the market. Valuations are on average levels, flows are okay, the capital issuances in the market are actually quite tepid. Growth is quite tepid. So bull markets, do not end with such type of indicators. So I think the indicators are not matching up with the so-called consensus view. The only place where I think the indicator matches up is FII flows, which are sitting at record highs. But they've been climbing for 5 years now through the bear market.
And more and more investors are overweight on India, or have been.
Yes. So that is the only place where I think you could draw some blood and say, yeah, that's the indicator which says that investors are too bullish. But look at Indian households. They own less equity than they've ever owned before. So this is not typical of a bull market top in that sense. In fact, since the election result day, India is up 3% in dollar terms, which is actually slightly less than what emerging markets have done. So we've underperformed emerging markets. So if this was the great big election, which is going to result in a big bull market, well, frankly, the price evidence is also not there. if you measure it from the election day.
So are you questioning whether this is a bull market in the first place?
No, I'm questioning the point that the consensus is all very bullish. It's not reflected in price. I'll give you one more piece of data. High beta has underperformed. That's not how bull markets behave. Basically, only quality has outperformed. Growth and quality is what market is buying, and maybe there is a bull market in quality and growth, but it's not an all-round bull market as such. So I think what I'm questioning is whether the consensus view that we are all gathering is really what the consensus is all about. There's a very big market participant out there which may not be as bullish as maybe a select audience maybe, or maybe the experts maybe, or maybe this group is.
Ramesh, you wear your emotions on a sleeve. Very simply put, how do you see some of these things happening, and do you see this very different from what's happening in the past, or are you saying this is old wine in new bottle? At the end of the day, some stocks do well, and it's nothing to do with government, it's nothing to do with...
Jake says, since you're also fond of cricket, I'll use that analogy. When you play a game of cricket, you follow rules. This is what constitutes a 4, this is what constitutes a 6, this is what a leg before wicket is. The market is also a game played by certain rules. And what Rhythm said is absolutely true in my opinion also. I've watched markets professionally since 1980s. So I've seen the 87 crash in America, the 2000 tech bubble in America, the various Indian bull markets, 92, 2008 topping out, the Thai index topping out in 94. When this game is played, there's a uniform set of rules when this tops out. It ends always in excesses, it ends always in euphoria, and it ends always in greed. It never fails. Bar girls will complain of, or will first say how much money they are making. Bad quality stocks will go up. Money making will become very easy. I don't think anyone in the room is complaining that money making is easy right now. So my sense is the long-term bull market started is okay. We are still fine. We've gone from a sweet spot to a slippery slope in the market. A market will always test the patience of the bull. It's not so easy to make money anytime in financial markets. So markets are testing us right now. But as long as the underlying factors that propel this bull market, the fact that interest rates are low, the fact that we have a new government remain in place, I don't see reason to despair and sell stocks. The true test of a bearishness, the true test, whoever tells you that, is if he's selling his portfolio. If he's doing that raising cash, then that guy is bearish. Otherwise, we all have opinions at different times. I had a bad day, I turned bearish, I turned bullish. My sense, Jake, just to summarize, is that you can almost choreograph a bull market top. We may see the signs and not react to it, or we may fail to react to it, but the signs will clearly be there when bull markets top out, as I think Rhythm was also saying. I don't see the signs right now.
Sushil, since you follow charts and follow correlations, clearly you go back to things that indicate markets have, are ready to take off, markets are ready to fall, and the traditional correlation between, let's say, commodity markets and you've been seeing more recently a complete breakdown of correlations. Am I right?
I'll quickly chime in one unique property of equities. Given inflation and population growth is what all economic historians are used to noticing for the last couple of hundred of years, within which of all the 4 asset classes, equities has one unique character. It is the only asset in which reinvestment of profits creates an accelerated growth curve. All other asset classes don't have that. In that sense, perhaps someone who's more notorious for calling bearish triggers in the market because charts facilitate that. But when I talk the real long term, and as Mr. Kapoor said, what is the real long term? So when we are talking about, I'll repeat what I said yesterday. There's a fantastic book I'll recommend even anybody else still in the room who has not read it. Triumph of the Optimists by Dimson and Marsh. They've compared 108 equity markets over the last 100 years of data, synthetic data or whatever. The simple fact that has stood out is, if those indeed genuine long-term investors do exist, they are there, over very long time frames, it's totally absurd to talk bearish in equities. History stands out, and the reason for that is there. Now, within which, if I jump back quickly, say, in the context of our Indian equities, from 2001 odd, the lowest levels in markets were seen in 2001. Indices somewhere are showing the lowest levels in 2003. But I think the gloom of 2001, up to which the bloom of 2007, January 2008, we were about seven and a half years long bull market there. After that, the steep cut down might have looked to some like a bear market, but now in the benefit of hindsight, a triangular consolidation over the last 5 years, and we've come out of that.